Bollinger Bands, and probably more specifically, a set of different Bollinger Bands with different ATRs away from the mean can be a very effective way to set up a day trading strategy. And there's two strategies that I look at when I'm day trading using Bollinger Bands. And I do like having Bollinger Bands on my screen when I am day trading. I add other indicators in addition, such as pivot points, which are very important, that I would also use in day trading, and probably either a MACD or an RSI indicator. But just to keep things simple today, I want to just talk about Bollinger Band day trading and how you would use Bollinger Bands in your day trading. I've done previous videos on Bollinger Bands for swing trading, which is a little bit different. When I'm day trading, I'm looking at Bollinger Bands in two ways. I'm looking at them to show me a counter trend trade, which means that the price action has gotten into a 2 or 3 ATR deviation from the mean, and I'm expecting it to revert back to the mean. And the other thing I'm looking at would be trend trades, where that the price action is continuing up with the existing trend, pre-existing trend. Day trading is a lot more active and, in my opinion, a lot more accurate in the morning hours. Now I'm on Central Time, so you're talking 8:30 to about 10. You should be your most effective day trading. I'm going to go through the charts today like I was doing it all day. And again, I'm not showing you actual day trades that I took. What I'm going to do is try to explain the strategy to you and what you should look for. I'm hoping to get some live trading and some streaming done later, and where you can actually see me in action doing it. But I will admit that after about 10 o'clock Central Time, it gets a lot more difficult, in my opinion, to day trade using Bollinger Bands and day trade in general. It's also a lot slower. You get some grinding action, which can continue the trend. And if you're looking at what I have on the screen right now, you can see how it's pretty much grinded lower over the course of the day after the 10 o'clock, after 10:30. However, just because you can see it on the screen doesn't mean it's easy to trade, especially because it's so slow and you have such small candles typically. So let's start out with the first couple of candles this morning. What I noticed, of course, it's very common to have, this is Amazon, it's very common to have very high volume right out of the gate. That's normal. It came out, it hit the 2 ATR and a 3 ATR band. So now I'm thinking that I'm going to need a pullback probably to the mean at some point. So that's the trade I'm looking for. The next candle, it started at the 2 ATR, went to the 3 ATR, and is still pushing it. I wouldn't want to jump in too early, because this could just continue to take off and go straight through and just continue to push these bands higher and higher. So you don't want to just jump in. But you've got a good candle here that's at 3 ATR, another candle here at 3 ATR. I would probably, if I were trading this, been looking for an entry around right in this area, somewhere between the 2 ATR and about right here. That's where I would have wanted to try to take this short back to get back below 1 ATR. So if I taken it short here, my first profit target I'm looking at would have been this 1 ATR band. Might have taken partial profit here. My real target is this main line here, but you don't always hit those. So take some partial target here. Maybe take a little more off here. Move your stops down. My initial stop would have been right here, so I'd have moved it down to here. And for this candle I would have dropped it even further, and by the time this candle closed, I would have moved my stop here. So I would have gotten out of the whole position right here. So now, I know it looks, at least appears, that I have an uptrend, from these candles. So I need to try to find a long entry. Well, the problem is, I don't really get a good long entry. The only one I had was right here. So if I was going to go long, I did a counter trend trade right here, coming back to the mean. So I would have gotten at least part of this profit. I've got a little bit of a previous uptrend here, and you can't see the previous price action, but there was some more uptrend going on behind it. Right here, when it came up over this candle, or maybe even right in this area, would have been the long I would have been looking for for a trend continuation. Again, this was a counter trend trade back to the mean. Here I'm looking, this is a 5-minute chart. You can use any time frame. This is a 5-minute chart. Here I'm looking for a trend trade. So I would have gotten along here. You know, I probably would have taken some partial profit here at 2 ATR, and then start bumping my stops up below this 1 ATR. You know, and I really look at the candles. This right here would have been a sign it hits this 3 ATR to take the majority of the position off. This was a big up move. You know, it broke above the opening high. You know, this would have been a tremendous candle to take a lot of your profit off right here. Move your stop up to here. This candle, you know, again, another candle between the 2 and 3 to take profit if you hadn't taken it here. And then I'd have moved my stop up to here. Because now, really what I'm looking for now is a more of a reversion back to the mean trade. So I would have taken my stop here. I may have taken a short right here. You know, this candle, as it broke below it. You know, here I had to move up. I'm going to go short here. My initial stop would have been the top of this candle. I got this candle, moved my stop down to here, and I would have gotten stopped out right here for a small loss. But I've got a good gain here. I've got a good gain here. I'm going to take a loss right here. So now I'm moving back up. And there's a little bit of a decision for you to make here. You could, because it's pushing 2 ATR, you could start to look for another trade reversion to the mean. It turns out, had you done it, you probably would have gotten in around here to break of this candle as for reversion back down into here. If you had gotten in there with a stop here, you know, you would have actually made money as it came back to the mean. You would have sold here. It had been really aggressive. I probably would not have taken the trade in real life had we been trading this, because I've got a good profit, and a small loss. You know, normally this would be where I would fold up my notebook and say, well, I'm done for the day. So this trade, just simply at 2 ATR, I probably would not take, but it was a valid trade had you taken it back into here. And you get into this area, you know, you're really starting to look for a long. And this, to me, if you're looking back for a long, would have been the long. Right here where you went over here, you'd have to stop in this area. It would have consolidated. You would have moved the stop up to probably just still below the white line, and you would have got stopped out here. So you would have went long here, got stopped out here for a loss. Now you're moving down. This trade I probably would not have taken because, again, I had this uptrend. I'm a little sideways here, but there's really nothing telling me that it's going down. If anything, you know, I've got right here, I've got a 3 ATR push. You know, I would have been looking for a long after this candle up into here, and then I would have bumped my stops up, and I probably would have got stopped out right here for a break even. Now I've got a downtrend. You know, it's bouncing in this area. You know, I'm thinking, okay, where am I going to go? You know, where's a good time to short? You know, here would have been a good short when my stop initially be up here. I would have had to put my stop up here initially. Gone short here, it bounces around, don't like this candle, don't like this price action. I would have moved my stop down into here and got stopped out. But, you know, I would have had a loss. I'm not sure exactly how much, but there would have been a loss there. And then still I've got a downtrend. I'm at the 1 ATR, 2 ATR, almost hit the 3 ATR. This candle, you know, is a candle that's showing it wants to move down. One problem is I've got really contracted bands here, so you know price action is starting to squeeze. I would expect them to widen out. You don't really know if they're going to widen, if it's going to shoot up or it's going to shoot down, but I would have been looking probably to go short right here just because of this candle. Went short. I would have had to stop up here, which is a little further away than I wanted. I would have taken probably half my profit right here, moved the stop down to break even, and I would have taken the majority of my profit right here. So if you look at the trading that would have happened, you know, as I've gone through how I would trade Amazon through this price action, keep in mind that, you know, this is not live trading. You know, if we're live trading, and of course it's close to the end of the day, but if we're live trading, you're pushing a 2 ATR here, so you're really kind of thinking that you might get a move back up toward the mean. I still wouldn't recommend this trade, if we're trading live, because you're going into the final hour of trading and people may be selling off. If anything, I think there's a potential you could break below this low. So this would be a dangerous trade to get into as everybody's closing their positions, even though it's starting to meet some of the criteria that I look for when I'm using Bollinger Bands to day trade. Now, this is a very simple strategy I'm going over with you and just wanted to show you how it would work. Please keep in mind that, in my real day trading, if you do see some of my day trading screens in the future, I would have pivot points also. And I would look at those pivot points as how they compare to the Bollinger Bands and where it's at with it, where price action is. I also do pay a lot of attention to these candles, and I pay attention to previous price action at the weekly, daily, 4 hour, and especially probably the 15-minute time frame. I like to watch. I'm trading 5 minutes. Typically I do 3 times. So if I'm looking at a 1 minute, if I'm day trading on a 1 minute chart, which I don't do a lot, I would look at a 3 minute chart also. So these are things you got to keep in mind. What I'm showing you here is a very narrow version of what I would look at if I were actually day trading and going through that with you. But it does give you a good example of the strategy and how it works. Whether you're doing a trend trade here where you're going back to a previous trend, or up in here the counter trend trade, which is the reversal back to the mean, which is the way I use Bollinger Bands. There were a lot of trade opportunities here. Another thing you noticed is I went through the trades with you, I was honest and told you, hey, I would have had a loss here, I'd had a loss here, I'd have had a break even here, would have made money here, here, and here. That's the way day trading works. And that's the way all trading works. You don't make money on every trade. You just have to control your risk and hit your profit targets. And when you do, try to make more money than you lose. If you hit 60% of your trades, then even if you your gains and losses are exactly the same, you'll still be profitable. If you make twice as much when you win as you do when you lose, then you could hit only on 40% of your trades and still make money. Personally, I need a higher percentage win rate than 40% because it bothers me to lose. So I usually shoot between a 65 to a 90% win rate when I'm looking at different trading strategies. And overall, I'm pretty good at hitting those. And you're looking at price action. This is live price action over here. It's still pushing that 2 ATR band, which is what I was saying. Coming into end today, you have to be very careful about looking for that reversal. This right here actually to me would have been a potential reversal back to the main candle right here to go long here with a stop through here. And you would have lost money on this trade. You'd have got stopped out right through here. Because of the time of day, I would not have taken that trade, but it does hit the qualifications if you're just looking at the Bollinger Bands. It's something that you really have to look at and really have to practice at. Practice is extremely important. And you should always paper trade before you live trade. Whether you're day trading, swing trading, option trading, whatever you're doing. Make sure you understand the strategy and how it works. And also understand that it doesn't trade the same way for all securities. The volatility makes a big difference on how well the Bollinger Bands work. But they are effective. They are an effective tool to add to your quiver of arrows, so to speak. But it's just a tool, and it's just one tool. If you want to know how to set these Bollinger Bands up, I'm not sure I told you this earlier, but in the description there's a link that takes you to a video that shows you how to set these up. If you would, please like this video, please subscribe to the channel, and please leave comments and let me know what else you'd like to hear about. Thanks.